Over 400,000 options detected on PBR, Petrolero Brasileiro, today, June 12. And in this video, we are going to explain what this strategy is because we think this is a no loss, risk free, or zero loss strategy. And we're going to analyze this trade to show you why that is so, and so that you can learn this and maybe implement it in your trading strategy. So without further ado, let's get right to it. These options were done, as you can see, at the last hour of the trading day at around 3:36, 3:35, 3:39. And so when we take a look at it, it's actually also the June 16th here, and not just the July 21s. These are all for the 12 strike price calls you can see here. And what you notice right away is also that the price of the 12 strike call here is 1.97, and also for the July also 1.97, right? So when we take a look at the options chain, this June 16 that expires 4 days away, you'll see here 300,000 of them here. And so what we think is going on here is that they are selling this 12 strike call for that $1.97, which is $197. And for the July 21s, they are buying this for the 197. And so when you get both buying and selling at the same price, it ends up becoming zero, right? And so that is why when you analyze this trade, you can see that this is a no loss trade. Because if the price goes up, you can see it still stays zero. There is no loss to this because this is a calendar spread where the max profit is at the strike price where you're buying and selling the calls, and so you see this is a calendar strategy. And so if you know calendar strategies, the max loss is what you pay for it, and since we paid zero for it, then there is no loss. So this is a risk-free zero loss strategy here. You can see as the price goes down, you can actually make even more, right? You'll see here this is has a slight negative delta here, positive theta, because this trade doesn't decay in value. It could not, because the value of it is zero. And so when we look at the chart of PBR, you'll see that it had rallied for the past few days, right? And so there is a possibility that it could pull back and come back down to this $12 range. And so this is why this trade is being done. Not only because it is risk-free, but also when we look at the volatility as well, you can see that the current IV percentile is only 11%. And so this calendar spread, you'll see here, has a positive vega. So any increase in volatility will also benefit this trade as well, not just a price movement of downward here. And so you'll see here at expiration, which is June 16, this trade will start to become very similar to that blue line, not the purple line. And so the profit will increase. You can see that as it goes down, any amount of profit, it starts to increase as it goes down, and all the way up to max at around $12. So this is a very excellent risk to reward ratio, because your risk is basically zero and your reward could be a lot more, right? So you can see here the reward all the way up to 50, about 54. And if you're paying only zero, we also notice that there were at times when you can see here like this 0-second mark here where they paid 199. You can see here this is for the Julys. Over here at that 0-second mark again for the Junes, they actually had to do it for 198. So they sold it for 198, paid 199, which actually means they had to pay $1 in debit here. So they do have a dollar potential loss here, but you'll see that this trade was to get all these. They were trying to get it for zero, and at times they had to pay $1, and so that does happen. So because it's very difficult to get trades like this where it's zero, and so they were able to get actually quite a lot over. We definitely know there's over right here, just these over here. We know there's definitely over 400,000 that was zero for the price of zero, right? Because this price matches are matched up with, and so yeah, that was so this this trade here being done at the last hour, no loss. What do you guys think? Comment below on what you think. Have you ever traded something like this? What do you think about this no loss strategy? And do you think it's really too good to be true? Is this something that is this something that is real, or is this something that isn't possible? Because as they say, nothing in life is a free lunch, right? But over here, there is a slight, this look appears to be very free here. Except for the commission that you may have to pay for your broker to trade options, right? There might be a little minor cost to it all, but the risk to reward is just substantially very high. And so what do you think about this? Is this legitimate here? Comment below. And if this was something you enjoyed learning about, please smash that like button. It encourages us to make more videos. We actually made a video also about a no-loss strategy just yesterday on Nike. We'll put a link to that at the end of this video, so you can see that as well. And if you're interested in other stocks with unusual options activity, or you'd like to see our trades on how we trade, you can watch some new exclusive videos on our channel to learn how we are trading if you join our membership. Just click the join button on our channel and you can learn more on our memberships and what kind of access you can get to our videos to learn more. All right, so take care everybody, and good luck.